You're watching Lunch Hour. Timbor Homes is a stock that listed today. It's up about 36.6%, and that means it's up about 23 rupees. Not a bad listing at all. But Anant Malu, CMD of Timbor Home, joins us from Ahmedabad now. Mr. Malu, thanks for joining us. Take us through the fundamentals of your company. You've raised money to really look at expansion plans and establish new stores across India. Can you take us through what the plans are around that?
Well, thank you so much. And Timbor Home, we are an integrated manufacturer of modular kitchens, furniture and timber products. We are operating 3 manufacturing factories in Gujarat, and we have a franchise network spread across India. We are present in 65 cities. These are all modular kitchen stores. Now we are expanding into home furniture also. So for this, we'll be opening up company-owned stores. These are large format stores. 3 such stores have already been opened. We are bringing in some new machines. Some of them have already come. These are CNC robotic machines to increase our production and maybe offer products as per European quality and standards. So that's precisely what's going to be happening.
What kind of revenues are you looking at? What is the current situation? Because, pretty much everywhere you've got cost pressures happening in the retail space, specifically input costs, property costs, everything is up. What are your margins like in your business, and what is the kind of revenue outlook that you can give us?
See, if you see, if you could put 2 benchmarks, the furniture industry is growing at almost 30%, and the organized retail is also growing at the same pace. And we have a mix of both franchise-owned stores, and now we'll be opening company-owned stores. So we'll continue with both the models. So in a franchise store, it is the franchise who takes care of the rental and the real estate. And for the company-owned stores, we are looking at 2 models. One is the SIS format, that is for which we've tied up with Reliance Retail. We've opened 2 stores with them in Jaipur and in Surat. We'll look at similar options or a pure rental arrangement for large format stores. So we'll continue both growing through both franchise as well as the company-owned stores. Since we are manufacturing and then we are retailing it, definitely our margins are definitely better and would be better than people who just import furniture and retail.
Take us through your share owning within the company. How much do you own in the company? I understand Bennett & Coleman owns about 20% almost in your company. There was also a big block deal in your stock early this morning, about 2.8 crore shares traded in block deals. Take us through what the holding pattern in the company is right now.
Well, I'm not aware of this. Our holding pattern is very clear. If you go through our prospectus, we promoter group, we hold post IPO, we'll be having close to 52%. Bennett and the other investors, they own close to 20 to 23%. And the public portion, the fresh issue of equity shares that we've done is 25%. So, and all the shares owned by the promoters and the investor groups are in a lock-in period for 1 year to 3 years. So I'm not aware of this block deal. Okay.
Then we will get back to you on that. But CRISIL had given you pretty poor rating as far as IPO grading is concerned, 1 out of 5. What were the concerns that they had raised around your company, and what are you doing to address it?
CRISIL's opinion is theirs. We've always said that we are a manufacturer retailer, and we have grown through the franchise route so far, and we're going to do a mix of both franchise and company-owned stores. So if you look at it and if you look at their report and see what we are doing currently and what we've done in the past, I would say it's their opinion.
Well, okay, so they had essentially said that there are intrinsic risks associated with the model that you have, because the franchisee model is a tough one to crack, especially when you also have the manufacturing side of it. But my question to you is that when you do manufacturing and retailing, are your margins much better?
They should be better. Now, up till now, yes, we've been selling through the franchise route, but now with our own stores, definitely we should be getting the retail margin as well, which is going to be reflected in our future numbers.
Okay, and of course, having your own stores means a lot of capex plan and a lot of money on the table, which you're going to be using out of the proceeds out of this. Take us through your growth trajectory. What can investors expect really from your company in terms of growth over the next year?
Like I would say, if people are invested with a medium-term horizon with us, would definitely be rewarded. Again, market movements are not in our hands. We can just say that the industry is growing, and the company, if you see right from the day when we started, we've been growing, consistently growing our top line and our bottom line. And we are in a sector where the organized retail is growing and the furniture segment is also growing. And the unorganized market is so huge. That's a very, very big potential for a company like ours.
Okay. Thanks so much for joining us, Anant, and all the best. It's a tough market to get into, but your stock has done well on the opening day, up about 36%, but it takes a long time for IPOs, new listings to settle it. This is normally the first flurry of activity as we've been seeing in the last couple of listings. We head into a short break now, but we'll come back and pick up the action and also get your view, investment view coming in on how the Indian markets are poised, especially with the headwinds that we're facing. Stay tuned.